Could traditional retirement plans like 401ks and IRAs be the worst thing you could do for your estate planning and for your family? Here's why. Hello, my fellow Ripplers. This is Chris Miles, your cash flow expert and anti-financial advisor. This show is for those of you that work so hard for money and you're sick and tired of it, and you're now ready for your money to start working harder for you today. You want that freedom and cash flow now. You want to become work optional, where you work because you want to, not because you have to, because you don't want to wait 30 or 40 years for retirement. You want to be able to have that life you can live today with those that you love, doing what you love. And most importantly, it's not just about getting rich, it's about living a rich life, because as you're blessed financially, as you have a greater capacity to grow your wealth, you can have a greater capacity to serve others with that wealth as well. Thank you for allowing me to create that ripple effect through you. So much thank you for tuning in, for joining us today, because this is why I do it every day. We're going 11 years strong. We're past our 900th episode that we've done on this show. And that's all because of you. Thank you for inspiring me to keep bringing more to you. If you want more of that, please like and subscribe to our channel. And hey, give us a review. Give us a rating out on iTunes or Apple Podcasts, whatever it is now. Give us a review. Leave us a review if you like the show. If you hate the show, don't leave us a review, please. But if you love it, please leave us a review. All right, so I want to talk today about an article I found actually on Yahoo Finance. I thought was very interesting, because here's the question is, why are traditional retirement plans bad for your estate planning? Now, I've known this for a long time, but it's really interesting because there are some factors that did change in the last few years that I didn't even know about until just the last few years. But most people still don't understand. And this is something you've got to be aware of, because if you're stashing your money into 401ks and IRAs, you might find out that your family will hate you for it. So let's go into why that is. All right, so I'm not going to go super heavy into this, but a lot of the stuff you'll hear or you'll see here, I'll highlight just a few points, because a lot of it's the same stuff you've already heard me say. But I do like it that there's an IRA expert, which again, I'm not a big fan of IRAs, but there's an IRA expert that says, hey, you should second guess why you're doing this. Now, for this person that we're talking about here, this is Ed Slott. He's the author of The Retirement Savings Time Bomb Ticks Louder. I don't know if I can say that 10 times fast. The Retirement Savings Time Bomb Ticks Louder. The Retirement Savings Time Bomb Ticks Louder. The Retirement Savings, yeah, forget it. Anyways, you get what I mean. So anyways, Ed Slott, he actually has been talking about some of the recent changes within the IRA code and everything else, and why this could be the worst asset to have when you're trying to transfer your wealth to your next generation, to your family, to your heirs, and so forth. Now, here's some shocking statistics. Many American households do have an IRA. As of 2023, 41.1 million households, that's over 40 million households, owned about 15.5 trillion in IRAs, just the IRAs alone, right? Now, you've heard me talk about Fidelity. Fidelity, between their IRAs and their 401ks, have about 45 million accounts. There's 45 million households that have got about 15.5 trillion. And I mean, that's a large percentage of households out there today. So a lot of money already in these. But he says, here's the problem, is that you got it for the tax deduction now, right? You try to get it for the tax deduction because you don't pay tax on now, but you save it till later. But your beneficiaries, what used to be good, and he even said this, he's like, back in the day, these were better because you used to be able to use what's called a stretch IRA. Stretch IRA was saying that you could actually take this IRA, and if you die, that money passes to your heirs. Now, it's not always tax-free, depending on the exclusion of the state tax and everything, the exemption that you get. But when you pass it on, what they can do is that when they take out of the IRA, they do have to pay taxes. Remember, it hasn't paid taxes yet. I'm not talking about Roth IRAs. That's a different subject coming up in a bit. But these traditional IRAs and even 401ks, same thing. When you transfer it over, even if it goes from a 401k to an IRA, you can do a stretch where you could go out for 30, 40, 50 years, right? So you can stretch out the amount of money you're pulling from it. So you're keeping your tax bracket lower. You're trying to minimize your tax as much as you can. Those rules have changed. Thanks to the Secure Act, right? He even says that right here. Now you have to do it within 10 years. You have a 10-year rule. You have to pull out a certain percentage each and every year. So no more stretching this out for 50 years. You got to do it within 10. This now means that you've got to pull out more money, which means you can be paying a higher tax rate. Your heirs will be paying a higher tax rate. You won't, but they will. Now, here's the one thing he says, right? As he goes on into this, he says, the one way to avoid this is take distributions long before they're required, especially because They got the 22 and the 24% tax rates. In other words, right now, we're in one of the lowest tax brackets we've ever been in history. Maybe this is the time to get taxed now so your family doesn't hate you when you're dead in the grave. You may not care because you'll be in the grave, but they're going to curse your name for years to come. They will not be a good thing. They will name their ugly baby, after you because of this. No, I'm just kidding. Okay. No, I'm just saying, obviously, they don't want to have to deal with this pain later because who's to say that tax rates won't be higher down the road? In fact, they could be a lot higher, especially at the rate that we're going right now, where they're saying we're going to debt way too fast. At what point is it so much that maybe our economy collapses and then this becomes ridiculous? I don't know. So his point is maybe you take it out now, or what you can do, as he talks about this here as well, is that you can do a Roth IRA conversion, right? You can convert it now to a Roth IRA. You will pay tax. You won't have to pay the 10% penalty, but you will pay tax on that money now. But again, if you're in a lower tax bracket now than in the future, and don't assume this is one of the biggest, I think he actually says it down here at some point. He says one of the number one retirement myths out there is that you'll be in a lower tax bracket in the future. But remember, that's just not realistic. With inflation alone, you got to pull out more just to live. Right? Just like when I used to think over 20 years ago that 5,000 a month was amazing. Well, that's now like a 10 or 12,000 a month lifestyle. That puts you in a completely different tax bracket, doesn't it? Even with lower tax rates today, it still means I would be paying more in taxes now if I had believed that in the past, especially because now I want to live on more to have that same lifestyle because it wasn't about the number, it was about the lifestyle to go with it. And so what people keep believing is, oh, well, tax rates, they'll be better down the road because I'll be cheaper. Well, maybe you won't have a mortgage payment anymore, but it doesn't mean that you'll be spending less. If even tax rates stay the same, again, you could be paying a higher percentage, right? So just be aware that that's one of the biggest myths out there is that people think they'll pay less. So he's saying, pay taxes now, get into a Roth IRA, then all the growth you have is tax-free. And now you don't have all this worry about trying to stretch it out. Now, he did say ditch the traditional 401k. He says that's no good either. In essence, you're just taking a loan from the government that has to be repaid at the worst possible time in retirement when you don't want to give money back, right? So it's the same thing. Now, I will skip to this. Here's what's interesting, okay? Actually, before we jump into that, let me just talk about this for a second here. So again, remember, he's just saying IRAs, if you try to pass this on to your heirs, they're not going to love it. They're going to have to cash the money out. They're going to have to pay taxes. The government wants to get their money paid at some point. So that's not stretching anymore. You have Roth IRAs, but the reason why most of the money is in traditional IRAs is because how much can you put into Roth IRAs? Nothing, right? Like $7,000 a year. So that's where people are doing Roth conversions and they're trying to convert it now. But again, most people let the tax tail wag the dog. They're like, oh, but if I cash it out, or if I convert to a Roth, well, then I pay taxes now. I already pay too much in taxes. Join the club. We all think that. But remember this, is that you still have to pay taxes down the road. An IRA or a 401k has zero tax benefit. You are just delaying your taxes down the road. You're kicking the can down the road. When has procrastination ever been a good thing? Okay, I know somebody's going to find the exception to that. Like, oh, actually, I procrastinated this and that helped. Great. But the vast majority of the time, procrastinating doesn't mean anything. One thing I like that he pointed out is that right now, you do know what the tax rates are. You can plan accurately today. You don't know what they're going to be in the future. You are literally gambling your future and your family's future. You're gambling your legacy, hoping and praying that you're going to guess it right. And maybe you might, but maybe you won't. That's the gamble you're making. Well, if you can do it today and say, well, now I can move into a Roth, that's better. Now, I'm not always the biggest fan of a Roth, but if I had to choose, I would choose that. If you've been following this podcast, you're probably looking for great ways to create passive income right now, right? Well, we got you covered here with Central Lending. Central Lending specializes in alternative investments that actually are designed to create steady returns and long-term financial security for you and your family. Now, they prioritize transparency. They love, building those strong relationships, giving you that confidence and peace of mind, knowing that you have your money working harder for you, so you don't have to work so hard for that money. You want to learn more how to do that? Go to centrallending.com and check out what they've got today to create your passive income and wealth creation right now. That would definitely be the better way to go. So that's what he's saying, like stop funding the 401k, which now there might be a Roth 401k option, could be better. But for the most part, again, you're trying to sock this money away in a place that now is no longer accessible. Remember, the difference between the 401k, even a Roth 401k and having a Roth IRA, the Roth IRA is not tied up in your company. If you put your money in a Roth 401k, that money's trapped. That's why we need to go to try to fill out our passive income calculator. And one of the questions we ask you is how much is in your old 401ks or IRAs, not current 401ks. We even try to bold that just so you know, like, do not count your company 401k. And sometimes people still do because they still say, oh, I didn't know I wasn't supposed to put that in there. No, the old 401ks, the ones that were from a previous employer that's not in the current employer's 401k plan because it's trapped in there. Unless you're about 60 years old or older, that money's trapped. As long as you work there, you cannot get it out. It is not a good place to have it trapped in that prison. So that's where I say, like, having an IRA, even a traditional IRA is better. But again, there's no benefits there, right? Having a Roth 401k, sure, it's a Roth, that's better. You don't have to worry about taxes because you paid them now, and then it grows tax-free, comes out tax-free. But again, it's tied up in your company. So that's why you might use a Roth IRA separate of that. Now, let's go back to what he said here. He has a small little paragraph at the very end about what's the answer, because that's going to be your question, or really your response to this, right? Is, okay, great. So IRAs, don't die with them. Don't die with the 401k. Plus, there's always that debate about whether I should be paying taxes now or later. And it sounds like now might be better. And I will tell you, in the 110-year history of the federal tax rate, we are in one of the lowest years in history. So if you are making a bet, and this is literally a bet, you don't know the future, right? The bet is that taxes are likely to not go any lower than they are now. If anything, Trump wants to extend the tax plan, right? To extend these tax rates that are so low right now. Because when he got that tax plan in place in 2017, it was the lowest we've seen in decades. So to see it as low as it is today would be a good thing. But don't expect it to go lower, right? That's a big, big gamble. But if you were to bet one way or the other, the odds are in the favor that these tax rates have to go higher to pay for the debt. That's why it's better to do that now. Now, what he does say, because again, Roth IRAs are still okay to use, right? And there could be things you can do to donate your IRAs and things like that after you're 70 and a half years old. Then you can donate and get a write-off. Crazy. But he does say this. So let's go back to here. So at the very, very end, we get to the bottom of this, right? And then he says this. He says, Slot also noted that the income tax exemption for life insurance is the single biggest benefit in the tax code and is not used nearly enough. And life insurance can help people achieve three goals: larger inheritances for their beneficiaries, more control, and less tax. He says you can get the promised land with life insurance. Now, if I were being skeptical, I'd say, okay, Chris, yeah, I get that. Yeah, you guys offer life insurance. Yes, we do. We do that. Notice we hardly ever talk about the death benefit, right? Although that's a perk, we never make that the focus. Because the reason that I use life insurance that's different than trying to use a Roth IRA or 401k is that I use it to have money available now. I use it to diversify my emergency fund, because my emergency fund, I need to have a good amount of cash in there to ensure that we protect our family. But if I keep it in the bank, I don't make that much interest. But if I keep more in my life insurance, I'm making like 6% a year tax-free. Tax-free. My bank account, my best, highest yield savings account is about 3.5% taxable, which gives me one more stupid tax form to give to my accountant. I love that I never get a tax form for my life insurance. That money grows tax-free, it's untouched, it's guaranteed. He talks about more control. I do have more control. I don't ever worry about market swings and anything like that. And even the people that talk about indexed universal life and you don't have to worry about market swings, they still worry about market swings, because even if the market doesn't go down, if it doesn't perform well, you still don't make enough money for those rising costs of insurance each year. Where with my whole life policy, my costs go down each year. They actually get less and my compounding interest grows more, which creates this inverse effect. It creates this faster, this faster momentum that I get. And especially with the way we design it, we do it to where there's so much cash going in up front that builds in this tax-free savings account that it actually becomes not just a good place to store your cash, but it can also be a place to use to be able to make money in two places at once. When you use it for investing, for business types of deals and things like that, you can do so much more with it. I have more control of my money. I have better safety, safer than the banks compared to what the FDIC has almost nothing in reserves for. And I've also got the ability to pass that on tax-free to my heirs. It grows tax-free, comes out tax-free, just like a Roth IRA, but it also goes to my heirs tax-free. And I can still use that money to make money now that can actually generate cash flow, passive income for me. I can't do that with a Roth because the one thing with the Roth is that it's going to make me wait till I'm 59 and a half to take any of those gains, or they slap me with a 10% penalty. I don't have that problem with the life insurance. So that's why it's my weapon of choice. That's why it's most of our clients' weapons of choice. Yeah, we might still have some, Roth IRAs or IRAs, 401ks. A lot of our clients will still have some of those things. I'll tell you though, after many years, many of them are trying to figure out how to get out of them now to do just what he said in that article, which is how do we unwind these? How do we just pay taxes now? Even if it means I'm paying a penalty now in taxes, so I have more control of my money to use it however I want. Understand that with the life insurance, I can invest it anywhere I want. The IRAs, they mostly, if you do a self-directed IRA, you can invest it almost anywhere. But if you try to get that nice little car collection, you can't do it. You can't go invest in like designer cars or whatever, like big, cars that could actually appreciate in value, like the really nice ones. You can't do that with an IRA. Art collections, you can't do that with an IRA. Almost anything else you can do, but you can't do that. And again, IRAs and 401ks, especially when you're under the age of 59 and a half, are not designed for you to get passive income now. It's set there to accumulate and grow forever. And then you can start taking out the money. But again, if it's just an IRA, you pay taxes on it later. Even if you make all this money, you still have to pay taxes down the road. Whereas my life insurance, I don't have that problem. And so, same thing with the Roth IRA, you don't have that problem as well. So again, does it mean that it's one or the other? No, it doesn't mean that. It just means for your individual situation, you might have better hope of how you can use it. Me, I don't like to use IRAs, Roth IRAs, or 401ks because I'm actually in a place where I'm in my 40s. I'm living on this stuff. I have the passive income coming in. I don't care about that stuff. It does me no good, no benefit. But here, when I have my life insurance as this tax-free savings account to use that can pay me more than the bank does, and I can still use it to invest too, that gives me power. That gives me choice. That gives me options. And that, as a result, gives me freedom, just like hundreds of our other clients do too. So anyways, I thought that was interesting. Remember, if you're trying to plan for your retirement and all that kind of stuff, remember, it's not just about you. It's also about your family. What are you leaving behind for them? Are you leaving behind a legacy of freedom? Or are you leaving them behind really a legacy of taxes, right? What are you leaving behind? Do you want that money to work harder for you and them? Or do you want your money to just whittle away and then disappear as the generations go on? That's what the government wants. They want their money back so that your family's left with as little as possible. Minimize those taxes, get rid of the government, get rid of that silent partner that we know doesn't know how to spend money right anyways. And instead, you get that money in your family, teach, not only become a wise steward yourself, but teach them to be a wise steward and watch how your wealth can grow generation upon generation upon generation. Got questions on how to do that? Even if you want to figure out how to do infinite banking, there's actually a whole section on that on our website at moneyripples.com. In the meantime, guys, make it a wonderful and prosperous week. We'll see you later.